CFO at Blue Dart Express, Aneel Gambhir, joining us on the show right now. Aneel, hi, morning. DHL has come out, saying that they over-invested in India and specifically Blue Dart. Would you say it's an inaccurate statement?
Good morning to you all. Actually, it is not an inaccurate statement, and I would like to take you back to beginning of 2018. That is where we had started our very aggressive expansion. Thereby, we had a plan to expand to all the pin codes. As you know, India Post has got 19,100 pin codes. So we had also planned that we will cover all the pin codes so that we are able to reach every corner of country. However, when we reached to 18,000 pin codes, we realized that in some of the pin codes the delivery cost is very, very high, and that is where we thought that rather than covering all the 19,100 pin codes, we should do business where it is profitable. And that's where we rationalize our approach towards geographical spread, and we now cover 14,400 pin codes, and that's where the statement was that probably we had invested on higher numbers, and then looking at business scenario, we had to roll back, and now currently we are doing 14,400 pin codes. The statement should be seen in that context.
Your growth been slightly volatile. Couple of years ago, when I would interact with the management of Blue Dart, they were extremely excited about the e-commerce business in India. The business was growing, 30-35% growth was given for Blue Dart irrespective of what is happening to the world or what was happening to India. But of late, I can see a lot of volatility in your number.
Sure, e-commerce is very interesting space and is growing, and as we know that e-commerce is touching everybody's life like never before. However, having said that, there have been certain regulations which have been impacting e-commerce industry. I'm sure you all know about it, and that's where there have been some implication of those changes which have been proposed by government. But otherwise, this space has a very high potential. We are currently also growing in this space, but yes, as you mentioned earlier, 30-35% those kind of growths are not there. It's slightly lower, but we are still growing, and probably it has got a very high potential to grow. In our kind of industry, what we look at is we try to do business profitably. That's where we pick up volume which is profitable. Unlike competition where they pick up any volume which may not be profitable, maybe by undercutting the price. That's why you may see some impact on the top line. That is one factor. The second factor related to this is that earlier most of the things used to move by air. Now with the challenge on cost and profitability for e-commerce players themselves, they are moving some of the items on ground, and that's why you don't see those high growth number on top line, because ground versus air, there's a big difference in terms of pricing, and that's what impacts growth.
As we understand, there was also that one-time exceptional 64 crore rupees as well that you incurred in the quarterly numbers. Was this an account of the early release of employees, or was it something else? Just trying to understand the quarter a bit better.
Sure. So there are two impacts in that quarter. Two one-off items are there. One is related to right sizing of the organization. That's where we reviewed our employee strength, especially in the management cadre, and we saw some of the roles being redundant because of process changes or automation. And there are certain cases where performance was low for a quite longer time despite having given inputs. So in those cases, we've taken a call to relieve them early, and that's why that cost is accounted for in last quarter. The other part is related to some of the one of the small business line, that is e-fulfillment center, which have been perennially making losses. So we thought rationalize that approach, and we have written off the investments in e-fulfillment center, and that's why that impact is there.
All right, fair enough. That's why you're seeing that impact. Now, trade outlook, has lacked triggers in the near term. The coronavirus also crippling trade sentiment globally. This, along with the recent weaker GDP forecasts, do all of these factors also affect your targets going forward? Given the macro headwinds seem to be piling up.
Well, economic situation we all know. Currently, economy is facing headwinds. Obviously, that has an impact on consumption, and when consumption gets impacted, our volumes get impacted. So, having said that, given the current situation, as far as coronavirus is concerned, not much of impact is seen at this point of time. But what we hear from our customers, especially in pharma space, especially e-commerce and electronics, they are talking about supply chain could be disrupted in times to come if the impact of coronavirus continues. So we are keeping our fingers crossed and looking at how to mitigate that risk. And one another welcome engagement which we saw, that probably government is also seized of this matter, and they are also looking at duty cuts, especially so that any disruption from China can be covered up from outside, from other countries.
Could you be specific in terms of a business loss? I mean, if at all anything, what is the experience at the cargoes which you're handling, shipments which are coming from Southeast Asia? Have those things got affected, delayed? I'm just trying to understand the flavor of it.
So as you know, Blue Dart is domestic company. So generally we are moving things within India. What comes from abroad and from Indian airport or Indian ports to within India destinations. Having said that, so far we have not seen any impact of coronavirus. It is only that we are now hearing that some of the supply chain could get disrupted, and probably our customers are working on mitigating that risk. It may or may not impact us. Probably it will depend on time for us to know about it.
Is there any downsizing currently that you're undertaking at Blue Dart? There have been some reports, and post which do you also say stable margin profile in the absence of a very high fixed cost base?
So right sizing thing we have done already in December. So as far as economy, the top line is concerned, actually that is driven more by consumption, and I think government has been taking many steps in right direction, like rate cuts, cuts in income tax rates, and even recent budget also has made a lot of announcement which talks about improving the economy. So we are hopeful that in long term this should come up, and accordingly our top line also should grow and our business should also grow.
And give us a sense of how much you've saved post the right sizing, in which pockets perhaps, which segments of the business perhaps you've done that as well, just to help us understand the breakup.
We are into one segment, so actually it is not a segment. As I mentioned earlier, this right sizing is done in management grade, not in the front line. So that's where, and this was more related to redundancy of roles and also performance related items. So actually that should be improving our efficiency in going forward, and that should offer us better margins because of that efficiency improvement.
Just also,
it is not in any particular vertical or sector which we have done.
Sure. That's what I was referring to as well, within the corporate structure. But Mr. Gambhir, also in terms of competition, and we've seen Amazon very aggressively building up their own supply chain as well, bringing delivery in-house. How much of that is a threat? They are in your top 5 customers as well, and will you be able to find suitable, valuable replacements, given that they are such a big customer?
So as you know, both the big retailer players have been building up their in-house capacity for quite a long time, and we are aware of that fact and have been mitigating risk related to that. Having said that, we are focusing on other customers within e-commerce space, which are many startups are there, many omni-channel players are there. So we are looking at long tail growing, and that has grown much faster in the last 2 years. So that risk is being mitigated while remaining engaged with the top players. So this is a strategy which will continue. It's a dynamic scenario. I'm sure any business has got such dynamics which people have to take into account while planning.
We'll leave it there, Mr. Gambhir. Thanks so much for helping us understand what's currently ongoing at Blue Dart and the way forward from here as well.